What's going on, everybody? It's Jeff here. Welcome back to the channel. Investors are really getting spooked today. Markets were bloody across the entire board. Tech sector really leading some of that sell-off, especially as Jerome Powell and Janet Yellen were testifying in front of Congress. I'm going to talk about the three main things that investors had their ears really closely to. Next thing I want to mention is I was looking at the SPY on the daily chart, and it was the first time in the last year that after a little bit of a pullback like we just had, it hasn't made new all-time highs. Very fitting for the month of September as we're about to close and go into October. The market has been insanely extended. That's why our investment strategy has changed a little bit. I talk about it with everybody in the group. My portfolio has been shrunk down to only a few stocks. My swing plays are much smaller now and a lot quicker. And I'm beginning to play a lot of day trades. And it's okay not getting some of those massive gains right now in order to reserve some capital. Find the really good buying opportunities of quality stocks that are going to be able to hit their lows. You're waiting for it to hit support. You don't need to get in at all-time highs, okay, or after it's already run up, 10, 15, 20, even 30%. Get in at good quality, support entries and be able to make some of those gains. So in this video, I want to talk about a little bit about what is happening. Let's get right into it. First off, three things that they talked about today. One was bond yields were absolutely ripping higher today as investors are going to start taking some of their gains out of the market and pumping it into the safe alternatives. You've seen that with the reverse repo numbers continuing to move higher. And I've covered this on my channel before. Reverse repo numbers being that high just says to me that large institutions do not feel confident in long-term investments. They're doing the same exact thing that we're doing, is that we're getting in, we're getting a few dollars out of a couple plays and we're getting out of it because you never know what is going to happen on the next day. That was the first thing that was mentioned today. The next thing, they were continuing to talk about inflation. Now, if you remember about the September Fed meeting, Jerome Powell had said that they're going to look into stop their asset tapering, but they didn't really give a timeline on that of when it was going to begin exactly, but they did say they do expect it to end at mid 2022. And if they don't want it to happen too quickly, which would really shake the market, it has to begin sometime soon. So investors are prepared for that to begin very soon. The next thing they talked about is this looming debt ceiling, and Janet Yellen has really screamed at the top of her lungs that extraordinary measures need to be taken. She mentioned this, I think said those exact words, in order to prevent an economic and financial crisis. She said those exact words about a month ago, and still nothing has changed. She's trying to separate the politics and say that it is not a Republican or a Democratic thing. There's both parties, and it's important that both parties recognize how bad it is for the economy. But investors see that an action has not been made, and they're starting to get a little bit fearful of what exactly is happening. You can see that in the VIX as it did spike today. It did start to cool off a little bit. This is the SPY, and we're going to look at it quickly on the daily before we get into it. It did start to come back a little bit towards the end of the day before eventually leading back into a sell-off. Check out this for the daily chart. And I know it's kind of hard to see going through a screen share, but as you can see all the way back throughout the entire year, every pullback we have, which most of them bounced off the 50-day moving average, every pullback we had, once it bounced and recovered, it went to all-time highs all the way up. 1, 2, 3, 4, almost 7 or 8 times, all the way up until the beginning of September. And I'm going to zoom in on this last pullback we had. And I mentioned this numerous times. I said, once we break through that 50 moving average, it's going to go right to the 100. Exactly what happened. We got some good news. The Fed had calmed investors. They started to, give them the green light. Easy money policy is going to continue, and did pumping money right back into the market. However, this time we did not make all-time highs. That channel that you have seen, especially over the last year, that channel of trending has now been broken. The pattern has now been changed. Now, I'm not saying that we can't hit a double bottom and bounce off that 100 moving average, and I do think we are a little bit oversold. We might see a little bit of a bounce tomorrow. It might not last all day, but we're definitely, in my opinion, going to see a little bit of bounce in the morning. We might see a little bit, like I said, a double bottom, bounce back up and continue its trend moving higher. I do not think that this is insanely going to just, drop. The floor is going to drop out, especially because they've tried so hard to prevent that from happening. However, this pattern has now changed. Last thing I want to talk about, and I know some of you are really, talking about AMC. However, look exactly at the SPY chart for the daily. And then when you jump over to AMC, it's the same exact pattern. I mentioned this weeks ago saying that this was a different trend. AMC was starting to trend the market. Investors and the retail traders who keep an eye on the SPY, they keep an eye on the QQQ throughout the entire day as to say, where is that moving? And that's going to tell them where those big stocks are moving and their favorite stocks to be able to invest in. That's where they're looking closely. It was the same exact pattern. If we jump out here on the daily chart, we are still sitting at some good support in the 30s areas. Look for a bounce off that $37 level as once was previous resistance. And next stop below that is at that $33 to $32 level. We are in a bit of a bearish pattern. We bounced off this right here about the $38 level, and we weren't really able to get back up into the 40s. It is a bit of a bearish pattern happening. But throughout what the charts tell me and what looking at the charts, the play still stands. Shorts have increased their position, and as you can see from Ortex, it is pretty much at all-time highs. Volatility has decreased. Volume was higher today than it was in the 2 previous days, but everything still stands. The reason why we got into this play of that insane short interest back in January, February, or whether you got into March, April, May, still stands, and we are astronomically higher from that price point. So that's going to be it for this video. If you are watching other stocks, be quick with your positions. I know everybody wants to hit those home runs, and they see some of those plays that gap up from $5 to $8 or $15 to $20 overnight, but they could very, very quickly go the other way. So this is a really good time to be able to try to preserve some of your capital. We're going to get back to an insane bull market. Let it cool off a little bit, and you want to have as much capital to be able to get back into it. So that's it for this video. I'll see you in the next one.